Thank you for tuning into Wisdom Investor TV. This is a daily stock market report for Saturday, June 29, 2013. This is Richard here. You can find us at wisdominvestor.com. Please recommend a friend. Okay, we're going to cover the market action here for this week, ending June 29th. And let's first take a look at some of our indicators here and see what they're doing. First of all, the VIX index had launched up into the 20s last week as the market moved down, and this week the VIX index moved down, which gave us a rally into the market. We based out here close to the 16 area, actually ended the week at 1686. So we're going to be watching the VIX index here and see if we start dropping below 16 down in the 14s here, we're going to see more market rally here this coming week. So that will be one of our indicators we'll be watching this week. And then we'll take a look here at the new high, new low index here, and we hit a bottom here on that index. It hit extreme levels, and then we have been popping back up here. Still in a kind of a bearish situation, but we did pop back over zero. But really, we need to start getting back up over the 400 index number here on the new highs, new lows. And our New York Stock Exchange McClellan Oscillator is up above zero, as we have indicated before. When you see that moving below zero, then we're going to see selling in the market. So we're up over 19, and it is on the way up right now. So we'll see where that moves here next week here. Our trend indicator for the week has been down. We did start popping back up. We had this counter trend rally this past week. We had looks like maybe 4 out of 5 days up, and so indicator still overall down, but it's starting to peak up here, and more buying in the market's going to start turning that trend indicator around. And we're going to basically cover here just a couple things about our website here at wisdominvestor.com. We have our aggressive trader portfolio for those who are aggressive traders, and we have our core conservative investor portfolio. We recommend, if you're a conservative investor, to stick with that, be 100% into the conservative investor portfolio. If you're aggressive, you can use 90% and on the core, and 10% for the aggressive. If you're slightly aggressive and moderate aggressive, use 75% of the core, 25% on the aggressive portfolio. And then if you're very aggressive, you could use 50% of the core and 50% in the aggressive portfolio. So we're going to just jump here and look at the big picture of the market here. In the going to look at our core conservative portfolio, which is made up of the QQQ, which is the NASDAQ 100, and the SPY, which is the ETF for the S&P 500. And we're currently using the inverse funds to those. As the QQQ goes down, the PSQ goes up, and as the SPY goes down, the SH goes up. Again, this is for our conservative investor portion of the portfolio, or core portfolio, and we're up 2.7% on this particular portfolio here. So just take a quick peek at this. The SPY here has been down 4 out of the past 6 weeks, coming back up into resistance area. This is our weekly chart. Our indicators are pushing down. Our main indicators here are pushing down, so we want to stay on the bearish side on this big picture part of the market. We are pushing up. It's possible we could push up further here next week, and that would be a good buying opportunity for the SH, for the SPY. And then for the QQQ, again, 4 out of the past 6 weeks has been down. We did push up into that 10-period moving average. Can't get over it as of yet. Indicators are pushing down, so we will stay on the bearish side on our big picture of the market. So we're going to jump over here to our aggressive trader portfolio. Now, we did have a pop in the market last week, and as the market did move up, we did have our bullish funds here. As we came down on Monday, buyers stepped in and sellers came out of the market. So we started our bullish funds. We ran it all the way up here to this area, and then we took our profits on our bullish funds here. And let's take a look at what we did here for the week. And this was a short-term trade, counter trend rally. So very fortunate to take advantage of this. But we had the QQQ bull fund, which was TQQQ. That's a 3 times fund. It is aggressive. This is why we call it the aggressive trader portfolio. It did get us a nice 6% return. We had the SPXL, which is the S&P 500 bullish fund, 3 times the market. In other words, if the spider or if the S&P 500 went up 2%, this went up 6%, 3 times. The UDOW, which is the Dow Industrials, a 6% gain on that, and the TNA, which is the small caps, the IWM. So that was an excellent week there on the bullish side. So big picture here, and our indicators were short-term, somewhat bearish here, even though we did have a counter trend rally. It doesn't necessarily take us out of the bearish picture, but we did take advantage of this bounce. So we'll see how much is left of this bounce. Intermittent term weekly, we showed you our weekly charts over at the core portfolio. We're still bearish. Long term though, in our monthly we are bullish. So here's our monthly chart for the Dow Industrials, and we still have a nice up move on this. We have a trend that's moving up still. And so this until this indicator here starts turning over, market has an excellent potential to move back up. Matter of fact, it's possible we could try to get one more move to the high. So we'll be watching that here in the month of July. Now June was a down month, but we're going to be watching the July, and it's very possible we could try one more high. Now this chart only goes back until about June, but we've had so far 3 drives, market monthly new highs, and we're looking for the 4th drive here. And typically after that 4th drive, then we can get a market turnaround. So we're going to be watching that here in the month of July. Let's take a look at the DIA. Had a various selling here over the last 4 to 5 weeks. Came down hard last week. Selling dried up. Buyers stepped in, pushed it back up. Probably had some short covering rally here. Also part of this came back up into resistance. And on Friday of this week we had an interesting day. We were down about 130. We came back up to plus about 11, I believe. And then at the end of the day, the last 10 minutes, 30 minutes, the market came back down, ended up down for the day here, 0.9%. IBM was a big reason for that. I don't know why IBM was sold off, but it sold off over 1%. So, and IBM's a big portion of the DIA, which is the ETF for the Dow Industrials. And we're going to take a look here at the QQQ. Again, same thing, came down the week before, sellers dried up, pushed it back up, ended up with just a slight gain in the QQQ, still underneath that 10-day moving average here, and indicators are popping back up, at least temporarily, and we'll see if we continue to move up on this. So we'll be watching the markets here Sunday night and Monday, and if it looks like it's possible we could go up further. With the holiday week coming up, July 4th, I would be surprised if they're selling. Typically the first day of the month is a positive day, and you get into Friday, day after a holiday, Monday, the following Monday after a holiday is positive. So of course Friday we have the monthly job report coming out that could influence the market too. Our MACD is starting to turn back up here, and we are still below the 50-day moving average though in the QQQ. Let's take a look at the SPY, which is S&P 500. Still showing a overall downtrend here, but we did pop up, counter trend rally. We're just underneath that 10-day moving average. Looks like a doji candlestick. Tried to go up, tried to go down, ended about in the middle there. Indicators are pushing up, at least temporarily. IWM, it's just small caps. And for the IWM, and again it came down strong. Sellers dried up, pushed it back up, and ended down day on Friday at about a 0.5% loss. We are up over the 10-day moving average, and our 3-day, 10-day moving average price cross is just about to happen. That could make the IWM a little more positive here. The indicators here are popping up, and so we'll be watching. We're going to watch this MACD line as it comes up to the signal line. Does it deflect off of it and then come back down? I think it's very likely that we're going to eventually get a test of this low right here again. If it's a successful test, it will hold. We bounce up higher. That's possible what could happen here for July, and then we set new highs. Now if we come back down here and start breaking this is going to test these lows here. So we're going to watch that real close if we get that test here in the lows. So that's our report here for June 29th, 2013. You can check us out, our website, wisdominvestor.com. Use the site as much as you like. Recommend the site to your friends. Have a great weekend. Have a good 4th of July week, and good trading. We'll have a report here after the market on Monday. Have a great week. And by the way, we do update our buy sells for our ETFs on each morning by 8:30 a.m. Eastern Standard Time, 5:30 a.m. Pacific. Have a great week.